Let me address that for a moment. First of all, silver status as a Giffen good, meaning as the price rises, demand increases. That's usually not the way it is with assets, and making the shortages even worse. That is a big deal to factor into it. Now, look, silver's already up 43% this year, and the dollar's down 11%. 52 million ounces were delivered into COMEX this month already, with 3 weeks left. We have between a 5 and a 7% lease rate in London right now for available supply. It's normally 1% or lower. This signals that the big money, the retail investors, the big money, they're scrambling for real metal, not empty promises. And the big money above that are basically saying that your paper promises are crumbling for the industrial giants, the sovereign wealth.
Have you ever seen a market so distorted that it's practically begging smart investors to take action? Right now, silver isn't just climbing, it's exploding, trading near $45 an ounce while gold holds above $3,700. Lease rates in London are screaming tightness. COMEX deliveries are shattering records, and for the first time ever, silver has officially been reclassified as a strategic mineral by the United States government. That means this metal isn't just a speculative play anymore. It's now part of national security policy. Andy Schectman says the Fed has just given the green light to go all in on silver, and the data is confirming it. But is this really the once-in-a-generation setup that could rewrite the gold-silver ratio and unleash a parabolic move? Let's break it all down.
Look, let's go back 5,000 years. The geological ratio since the beginning of time has been 16 to 1, and it was that way for nearly 5,000 years. In other words, we'll call that God's ratio. You dig a big hole in the ground 5,000 years ago, and you would receive 16 ounces of silver for every 1 ounce of gold that you would pull out. And even Isaac Newton, when he was developing the ratio for the mint hundreds of years ago in the UK, 16 to 1 ratio. The average price ratio, we'll call that man's ratio, really since the Industrial Revolution, the average has been about 45 to 1. And that's been largely because silver's role as a industrial metal and gold's role as a monetary metal. What's really interesting right now is that it's coming out of the ground, according to my friend Keith Neumeyer, who is the CEO of First Majestic Silver, that it's coming out of the ground at 7 to 1. It is disappearing. It's found in nature, like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. The big deposits were found forever ago. To me, what has happened is largely driven by central bank suppression of silver. And we could talk about this for hours. But what is really changing right now is the amount of silver that is being imported into the United States. I truly do believe that someone grabbed Trump by the back of the neck and said, we must start importing gold and silver. The rest of the world is on to what we have been doing. Now, they have been holding down silver, in my estimation, for a very long time due to the military-industrial complex's need for silver. It goes well beyond electric vehicles. It goes well beyond solar panels. I have a very good client who is a consultant for the Department of Defense who tells me that there is as much as 500 ounces of silver in the cone of the majority of the high-tech cruise missiles, let alone aerospace, let alone all of the high-tech components that are used in military. This is the reason why 8 Western banks, 8, have held the largest concentrated short position in any commodity ever traded, ever in the history of the COMEX, in silver. Year to date, Paul, we've seen almost 11,000 tons of silver that has come into the United States, most of it coming from London. The amount of silver available in London right now for delivery, the float is 155 million ounces, yet they are trading somewhere in the neighborhood of 600 to 700 million ounces every day. However, reports are that they only report the final settlement numbers, not the numbers of trades that go into that final settlement, which would put it as much as 10 times higher. In other words, they are trading anywhere between 600 million and 700 million. You can multiply that by at least 10 times. You're talking 3.5 times annual global mine supply every single day is trading on the LBMA with a float of only 150 million ounces. What could possibly go wrong? It's a big, big problem. And I would simply say to you that the gold to silver ratio represents the opportunity of a generation. And I mean that sincerely. I'm not trying to sound like a salesman. Truly, this is something that, look, this has happened just this represents less than 1% of all of history. This ratio, which for 5,000 years was 16 to 1, up at this level, anywhere near 80 to 85, you're talking like 0.5% of all of history seeing this kind of distortion. So yeah, to me, it is the trade and the value, the asymmetrical value, low downside, high upside of a generation. In other words, people who have gold would be wise to consider trading some of it into silver at this ratio. One last point. When I first saw something like this, it was 2010. It was the first time I ever saw it.
Yep.
And it was the first podcast I ever did with Bick Swear. And I told everyone at that point, look, I said, Bix, this is the second time in human history in 2010 we saw 85 to 1 ratio. I said, we got to tell everyone to sell their gold. I'll sell it to the market, convert it to silver. Many did. Within 7 months, you had just bypassed the 150, 200-year average of roughly 45 to 1 to 37 to 1. So anyone who would have traded an ounce of gold in middle 2010 at 85 to 1, by mid-2011, you had $915 gold and $50 silver. That's 37 to 1. You could have traded back into gold with 37 ounces, way over doubling what you started with. So to me, honest to God, this is a gift that you only see once or twice, if you're lucky, in an investing career. So yeah, I think this is an anomaly of epidemic proportions. I think the market cap on that article that you're putting up right there, if I'm not mistaken, from the Silver Institute is full of nonsense, because it's giving you a market cap based upon all of the silver ever mined. The majority of the silver that has been mined since the beginning of time is gone. It's destroyed. It's in landfills. You use so little of it inside of whatever object it is that it's being, an iPhone or the first calculator that you ever used when you were a kid. The hair, it's all gone or blown up.
Andy Schectman opens by pointing out something remarkable. Silver behaves like a Giffen good. As the price rises, demand doesn't fall. It rises even faster, tightening supply further. This year alone, silver is already up 43%, while the US dollar is down 11%, showing how investors worldwide are rotating out of paper promises and into hard assets. He highlights record COMEX deliveries, 52 million ounces just this month with weeks still to go. Lease rates in London are spiking to 5 to 7%, compared to the normal 1% or less, a clear sign that big money, industrial players, sovereign wealth funds, and private investors are scrambling to secure physical metal. And it's not just an industrial story. For 5,000 years, the geological ratio of gold to silver has been around 16 to 1, yet today it trades near 80 to 1, even with gold over $3,700 and silver near $45. Keith Neumeyer of First Majestic reports silver is now coming out of the ground at just 7 to 1, meaning the price distortion is historically extreme. Production is running below 1 billion ounces per year, yet industrial demand from solar panels, EVs, medical tech, and electronics keeps climbing. Recycling helps, but cannot close the gap. Meanwhile, Western banks maintain the largest concentrated short position in history, creating a disconnect between paper trading, up to 10 times daily global mine supply trades on LBMA, and the tiny 150 million ounce float available for delivery. Schectman emphasizes that this is more than market speculation. It's a matter of national strategy. In 2025, silver was officially placed on the U.S. critical minerals list, aligning it with defense and clean energy policy. Other nations like China, India, Saudi Arabia, and Russia are bypassing Western markets, buying doré and concentrate directly from miners, and stockpiling aggressively. This is draining available inventories while pressuring settlement systems like the LBMA, which he believes has been teetering on default this year as settlement times stretch far beyond the standard T+1 cycle. The key takeaway is that the disconnect between paper price and physical reality is reaching a breaking point. When price discovery finally snaps back to reflect true supply and demand, Schectman believes silver will deliver an asymmetrical opportunity, minimal downside, massive upside, possibly doubling or tripling the gold to silver ratio gains as we last saw in 2010 to 2011 when silver hit $50.
In my opinion, if I had to guess, I would say that the true market cap of silver is far, far, far if we were to really let the price come out. If silver's role in solar and EVs and electronics, AI data, all of this stuff, when you factor in the annual mining production of about 820 million ounces, which is already running well below demand of about 1.2, 1.3 billion for 5 years in a row, we've seen a structural deficit where monetary demand and industrial demand is far greater than supply. I think you could say depends what the price is. Let's put gold at $5,000. I guess you could say if you put gold at $5,000 and you take the historical market cap, I don't know. I think you could see a real market cap of doing the math. I don't know. Between $2 and $6 trillion. It just depends upon, I think it would be multi-trillions. It depends upon whether it becomes both a monetary reserve asset and a irreplaceable industrial metal. The problem with trying to define the market cap, Paul, is price discovery has been destroyed. But I will simply say this. Right now, especially in the United States, I've been screaming about the amount of gold and silver that the countries around the world have been buying, such as Saudi Arabia, China, India, Russia. China is the second largest producer of silver in the world. They're flying all around Latin America, in particular Peru and Mexico. They're buying silver doré and silver concentrate, largely directly from the miners, paying double what the West will, sending it back to China to refine it. They're doing so to disintermediate the marketplace. But the amount of demand that we have seen where Russia is adding it publicly, they say we are adding it to our strategic stockpile. Saudi Arabia just took a huge position in it. India has bought between 700 and 800 million ounces over the last 6 years. All of these countries using the suppression of the Western paper price to stand for delivery. But what makes things so crazy is the amount of silver that is now coming into the United States. And in the first 3 days of the September contract, or first 4 days of the September contract, well over $2 billion worth of silver was delivered already into the COMEX, and we have the whole month of September ahead. That was last week. I haven't seen the numbers yet this week, but this has been every single month. As much as $4 or $5 billion worth of silver have been coming in minimum every single month since the beginning of the year. Big money in this country. And who is it? We don't hear anything about it. Same thing is true with gold. There are some very, very big money interests that are standing for delivery. And the real target of all of this is the LBMA, which is literally running on fumes. One more point to make on the LBMA. For a good portion of this year, the LBMA, in my opinion, has been teetering on default. Now, that's a big statement. The LBMA is a T+1 settlement market, where T is trade plus 1 is settlement. On the third day, those bars should be moving your way. The Bank of England tells us for most of the year that it's really about T to plus 6-8 weeks. Now, because there's a shortage of manpower and trucks, we're supposed to believe that the Bank of England doesn't have anything in the way of trucks or excess manpower to move the silver that belongs to these contract holders to where it should be going. It amounts to getting caught with their pants down. And this is a trend that we see accelerating, in my opinion. I think the market cap really, once price discovery rears its head, will be much higher than people think possible, much higher than the Silver Institute says. But the real flaw in their metric is by trying to figure it out based upon all the silver that's been mined, the majority of it's gone. Over the last 75 years, it's in landfills. Let me address that for a moment. First of all, silver's status as a Giffen good, meaning as the price rises, demand increases. That's usually not the way it is with assets, and making the shortages even worse. That is a big deal to factor into it. Look, silver's already up 43% this year, and the dollar's down 11%. 52 million ounces were delivered into COMEX this month already, with 3 weeks left. We have between a 5 and a 7% lease rate in London right now for available supply. It's normally 1% or lower. This signals that the big money, the retail investors, the big money, they're scrambling for real metal, not empty promises. And the big money above that are basically saying that your paper promises are crumbling for the industrial giants, the sovereign wealth funds.
We are witnessing a perfect storm. Record deliveries, structural deficits, elevated lease rates, and a global move to treat silver as a strategic resource. If Andy Schectman is right, this is the generational trade, the moment where patient investors get rewarded for holding real metal rather than paper promises. So here's my question for you. If silver finally breaks through its paper shackles and rockets higher, are you positioned to take advantage? Or will you be left watching from the sidelines? Drop your thoughts in the comments below. And if you found this breakdown helpful, hit that like button, share this video with fellow investors, and subscribe for more in-depth analysis on gold, silver, and the global financial shift that's happening right now.